Is MSTY's 147% cash return too good to be true? What are the risks? Hello, Diamond NestEgg members, super savers, and course fans. I hope you're healthy and well. As our channel has grown, so have the video requests from many of you. Some are bond related, but quite a few others are not. And in this month's member video, the top of mind question was actually what we thought about Bitcoin and how it might fit into an overall portfolio. These questions seem to have been driven partly by some of our members looking at potential alternative methods to inflation-proof their portfolio that do not depend on the government's inflation numbers, as we discussed in yesterday's weekend update. Link below for reference. But they came actually quite timely, given that Bitcoin just hit another all-time high this past weekend. It peaked at $124,529 intraday on crypto exchange Coinbase, although I should add that it then fell back again to $117,000 as of Friday afternoon at 4 p.m. Bitcoin and crypto in general is one of those hot button topics. Some people are practically all in, others wouldn't touch it with a 100-foot pole. But as I said to our members, here's the thing. As with many other topics in life and money, whether you love crypto or whether you hate it, there's really nothing that can be truly understanding it so that you can make an informed decision, especially since it seems that we may be hearing quite a bit more about this topic in the coming months and years. In any case, I've linked our Bitcoin 101 member video in the first pinned comment below for those of you who might be interested. In that member video, we talk about the arguments for and against investing in Bitcoin, the three primary ways you can get exposure to Bitcoin in your portfolio, as well as what our personal take on Bitcoin is. And one of the ways we highlighted for getting exposure to Bitcoin is via the YieldMax MSTR Option Income Strategy ETF, MSTY. To be clear, YieldMax's MSTY is not an inflation proofing tool in any way, but it has been catching the eye of some in our member community. And it's no surprise, because when you take a look at MSTY, the first thing that you may notice is that Morningstar shows a trailing 12-month distribution yield, or TTM, of 147.21%. Now, as our Diamond NestEgg regulars know, returns of this magnitude can only be real if they are a premium for the underlying risks that the investor is taking. So, with that in mind, here are the three topics that we'll be covering in today's video. 1. Is MSTY's 147.21% trailing 12-month TTM distribution yield even real? 2. How does MSTY work and what are the risks? And 3. How does MSTY compare to other Bitcoin investments? And what's our personal take on it? As usual, here's our front of video disclaimer. For a detailed disclaimer, please refer to the end of this video. Let's dive in now, folks. Is MSTY's 147.21% trailing 12-month TTM distribution yield even real? So, this Morningstar trailing 12-month distribution yield, or TTM, of 147.21% for MSTY. It appears that there are a few things that need clarification based on the emails that we've received. When we first saw MSTY's TTM yield of 147.21% on Morningstar, the numbers were so high that we had to redo the math ourselves, just to be certain. We went to Yahoo Finance as our second source and added up all the dividends that MSTY declared over the past 12 months, up till July 31st. Then we divided this total payout of $28.78 by the closing price of MSTY on the last day of July, which was $19.50. And what we got was a raw dividend payout rate of around 147.57%. Pretty close to Morningstar's TTM distribution yield of 147.21%, meaning that the actual historical dividend payouts on MSTY were indeed pretty much in line with Morningstar's TTM distribution yield here. So far, so good. But then we saw the much more measly 30-day SEC yield of only 2.01%, as well as the distribution rate on YieldMax's own website for MSTY of 85.95% at the time of this taping. So why is there such a big discrepancy between the three numbers? Confusing, right? Well, here are the key differences between Morningstar's TTM yield, the 30-day SEC yield, and YieldMax's own distribution rate. Let's start first with Morningstar's TTM yield of 147.21% for MSTY and how it's calculated. Basically, it takes the interest and dividends that MSTY earned over the past 12 months, so essentially the money that was available for distribution, and then divides this number by the closing share price on the last day of the previous month, plus capital gains distributions. The idea behind this somewhat complex sounding calculation is actually quite simple. If you buy a share of MSTY now, or to be precise, at the closing price at the end of last month, how much of a distribution yield, of a payout, could you expect over the next 12 months, assuming that the fund were to produce again exactly the same interest and dividends as it did over the past 12 months? Morningstar's TTM yield is no guarantee in any shape or form, but it can be a useful way to get a first feeling for what your distribution yield, your payouts, might be over the next 12 months if you bought today. That said, 12 months can be a long time in finance, and the likelihood that the next 12 months will produce exactly the same interest and dividends as the past 12 months is actually not that high for a product like MSTY, which leads us directly to this 30-day SEC yield of 2.01% for MSTY. Now, the basic idea of the 30-day SEC yield is the same as for Morningstar's trailing 12-month yield. You take past payouts, assume they'll stay the same, and then you divide it by a recent share price to see what your future distribution yield might be if you bought today. However, as the name says, the 30-day SEC yield takes your investment income per share earned during the previous month as the basis for the calculation, assuming that the last 30 days might be a better basis for forward-looking estimation than a full year. So, methodologically, the 30-day SEC yield, it annualizes the investment income from the past 30 days and divides this number by the maximum offering price per share on the last day of the observation period, which is often the previous month, or in our case, July. So, Morningstar's TTM is based on 12 months of backward-looking income earned, whereas the 30-day SEC yield is based on 30 days of backward-looking income that is then annualized or multiplied by 12 to give an annual number. But it's basically the same underlying idea. So why is Morningstar's TTM so dramatically higher than the 30-day SEC yield? Well, the reason is not that the payouts from MSTY completely collapsed during the past 30 days, as some of you might have suspected. Yes, they were very volatile, but not that volatile. The disparity in these two numbers actually comes from an important difference in the basis for the calculation. Here's what's mostly driving the difference in yields. Morningstar's TTM yield of 147.21% for MSTY, it includes income from options premiums in its calculations, whereas the 30-day SEC yield of 2.01% for MSTY, it excludes all income earned from options premiums, even if that income was actually paid out to fund holders in the past. And of course, options premiums are the main source of income for MSTY. So excluding these makes a huge difference. And the reason behind this exclusion might be that the SEC thinks that income from options premiums may just be too unpredictable and volatile to be included in its formula. Because remember, the 30-day SEC yield essentially tries to give you a best guess estimate for the distributions you might receive over the next 12 months if you bought a share at current prices, and assuming the distributions stayed the same as in the past. Morningstar's TTM has the same underlying idea as we just discussed, but they seem to be more optimistic about the stability of an income stream generated by options. And if that weren't confusing enough, YieldMax publishes its own distribution rate for MSTY as well. And of course, It doesn't match either Morningstar's TTM nor the 30-day SEC yield closely, but instead stands at 85.95% at the time of this taping. In its calculation, the YieldMax distribution rate is a mix between the Morningstar TTM yield and the 30-day SEC yield. Like the Morningstar TTM yield, it includes income earned from options. And like the 30-day SEC yield, it doesn't take a full year's worth of distributions as its basis, but just looks at the last declared dividend. So, the formula for the YieldMax distribution rate. It takes the most recently declared distribution, multiplies it by 12 to get to an annualized number, and then divides the resulting amount by MSTY's most recent NAV, or share price. And because options premiums are the main driver of MSTY's dividends, YieldMax's distribution rate from its website is closer to Morningstar's TTM yield than to the 30-day SEC yield, which again excludes options premiums. Now, all of these three ways of measuring the distribution yield have their limitations for such a potentially volatile and options-driven instrument as MSTY, but comparing their perspectives on the track record of MSTY is probably the best thing we can do before making an investment decision, even though they don't guarantee or predict really anything in this case. No one has a crystal ball, right? Although I've been wishing for one since I was a kid. In any case, it's the best numbers we have. So, here are 3 additional takeaways from this table in my mind. The first additional point is the differences in these numbers. This is probably the main reason why the 30-day SEC yield and Morningstar's TTM yield are so often quoted in the industry, so that investors like you and me have some standardization and consistency when we compare different investments. And that's why we generally like sticking to the latest TTM yields and SEC yields as shown on Morningstar's website in all our videos. The second additional takeaway from this table is that MSTY's distribution yield has come down a fair bit over the past year. Remember, both numbers here include income from options premiums, with the primary difference being that the Morningstar TTM yield includes income from the past 12 months, while YieldMax's distribution rate from its website is from the past month only, and then multiplied by 12. And if we look at this distribution table from YieldMax's website, we can see that this is indeed the case. Over the past 12 months, the highest distribution was around $4.42 per share in November of last year, and the lowest distribution was around $1.18 per share, most recently at the end of July. Given all the bond aficionados on this channel, I may not need to remind you, but in the Lammer family and in our Diamond NestEgg community, one reminder more is better than one reminder less. So, please do keep in mind that while coupon payments are guaranteed for treasuries and most other types of investment-grade bonds, assuming our standard no default scenario, distributions on funds, MSTY included, are not guaranteed. And these numbers that you see in this table, they will change over time. Moving on now to the third additional takeaway. What we can see from this table is pretty much how MSTY generated such large dividends for its investors. Options writing. And options writing on just one single company for that matter, which is a nice segue into the next section of today's video. How does MSTY work and what are the risks? As its own website says, the YieldMax MSTR Option Income Strategy ETF, MSTY, is an actively managed fund that seeks to generate monthly income by selling or writing call options on MSTR. MSTY pursues a strategy that aims to harvest compelling yields while retaining capped participation in the price gains of MSTR. But what exactly does this mean, right? Well, let's go through this step by step. Here is a high-level overview. MSTY, YieldMax's MSTR Option Income Strategy ETF, is the ETF that we're talking about in today's video. MSTY sells or writes call options on one single company, MSTR, or Strategy Incorporated, and collects options premiums for doing so. That's why YieldMax's MSTY has MSTR in its name, and also probably why their tickers are so similar, to make it clear that the underlying risk of YieldMax's MSTY is concentrated in one single company, MSTR, or Strategy Incorporated. So, who is MSTR, or Strategy Incorporated then? Strategy Incorporated initially started out as a software company under the name MicroStrategy Incorporated, hence the abbreviation MSTR. Under the leadership of its co-founder and now executive chairman, Michael J. Saylor, the company changed its focus from software to Bitcoin and then rebranded it in February 2025. As per its press release, MicroStrategy Incorporated, MSTR, today announced it is now doing business as Strategy. Strategy is the world's first and largest Bitcoin treasury company. The new logo includes a stylized B signifying the company's Bitcoin strategy and its unique position as a Bitcoin treasury company. Now, you might wonder why someone would invest in shares of MSTR, of Strategy Incorporated, as opposed to buying Bitcoin either directly or via a Bitcoin ETF, especially since Bitcoin ETFs are now approved and available to retail investors. Michael Saylor gave the following answer when he was asked the same question in a Bloomberg TV interview in December 2023. The ETFs are unlevered and they charge a fee. We provide you leverage, but we don't charge a fee. We offer a high-performance vehicle for people that are Bitcoin long investors. In other words, rather than take $1 and buy $1 of Bitcoin, as would happen under normal circumstances when you or I invest in Bitcoin directly or via a Bitcoin ETF, what Strategy Incorporated offers is that it takes $1, borrows some more money, and buys $1.50 or $2 of Bitcoin, as an example. And as a side note, the leverage or borrowing that Saylor mentions comes not just from traditional loans with fixed interest payments, but also from preferred shares, which some in the market like as an innovative financing structure. And some of these preferred shares that are shown as outstanding in MSTR's latest quarterly report show relatively high coupons of 8 to 10%. And before some of our bond and preferred stock folks run off to check out MSTR's preferred shares, do keep in mind once more that unlike the interest payment on a loan or the coupon on most bonds that we tend to talk about on this channel, a company can suspend dividend payments on preferred stock without any immediate consequences if cash were to become tight at some point. Now, the initial software business of Strategy Incorporated, of MSTR, is still around, but as far as we can tell, seems to have no noticeable impact on the share price of Strategy Incorporated. MSTR is probably best viewed as a leveraged play on Bitcoin, or as we touched upon just now, a way to buy more Bitcoin by borrowing more money. And borrowing money, taking on leverage, as our Diamond NestEgg community knows, can amplify, reinforce, and multiply both the upside and the downside of an underlying risk. When it's good, it can be really good, but when it's bad, it can also be really bad. So, where does that long story about MSTR, about Strategy Incorporated, leave us with YieldMax's MSTY, which writes options on MSTR? Well, to summarize it in my own words, yes, MSTY's distribution yield is quite attractive, as we've already shown you, regardless of whether you look at Morningstar's TTM yield or YieldMax's distribution rate on its website. But an MSTY investor pays for the attractive distribution yield by being exposed to, piling up if you want, 3 different types of risks at 3 levels. You have options risk, the risk from an income-focused option strategy at the MSTY level. You have leverage risk in the MSTR shares that MSTY writes its options on, the risk that comes from the money that Strategy Incorporated borrows at its level to buy ever more Bitcoin. And you have Bitcoin risk, the price risk of Bitcoin itself that MSTR buys and that underlies this entire pyramid of risks and instruments. And to be completely clear, in this specific case, the risks may not really mitigate or balance each other out all that much. On the contrary, if Bitcoin were to fall sharply, for example, the share price of Strategy Inc. might fall even sharper, given that it uses leverage, all of which might be even more amplified by the risks within YieldMax's MSTY itself, depending on how it might be positioned at that point in time. Because don't forget, MSTY uses options mostly to generate income, not to mitigate risks. In my opinion, YieldMax's MSTY is not for the faint-hearted. Nonetheless, given how curious some of you appear to be about it, let's take a look now at some historical comparisons to get a feeling for whether the potential gains might outweigh the risk that an investor may be willing to accept, and move on to the next section of today's video. How does MSTY compare to other Bitcoin investments? And what's our personal take on it? YieldMax's MSTY has total assets of $5.2 billion at the time of this taping and an expense ratio of 0.99%. It is a part of the larger YieldMax family of ETFs. All YieldMax ETFs seek to generate monthly income by pursuing options-based strategies on one or more underlying securities. YieldMax ETFs aim to harvest compelling yields from assets that are not typically associated with monthly income. The funds do not invest directly in the underlying stock or ETF. YieldMax is really just the brand name, though, and the actual investment advisor, the firm that's de facto managing the ETF, is Tidal Investments, a part of Tidal Financial Group. Tidal was founded in 2012, is headquartered in Milwaukee, Wisconsin, and employs over 135 ETF and financial specialists. Tidal is at its core an ETF platform. They collaborate with over 75 ETF issuers, managing 255 plus leading ETFs and overseeing assets exceeding 43 billion plus AUM as of the end of July. Tidal, in turn, is backed by FTV Capital, a San Francisco-based growth equity firm with a focus on financial services. But back to YieldMax's MSTY. It is a relatively new ETF that only started trading on the New York Stock Exchange, ARCA, on February 22, 2024, less than 1.5 years ago, so there is only a limited track record available. That said, let's take a look at how a hypothetical investment into MSTY a year ago compares to two alternatives. The first alternative is shares in MSTR, Strategy Incorporated, which would have given you leveraged exposure to Bitcoin, but without the additional options overlay from MSTY, as we discussed before. And the second alternative would have been BlackRock's iShares Bitcoin Trust ETF, IBIT, which would have given you exposure to Bitcoin without any leverage or options overlay. Here's a comparison table of MSTY, MSTR, and IBIT. In this column, we have the ticker. And in this column, we have the name of the ETF or company. Here is the latest share price at the time of this taping. And in the next columns, we have the total return over the last 12 months, as well as the trailing 12-month yield that measures distributions over the same time period. And these last two measures are all according to Morningstar. Let's first take a look at the total return over the last 12 months. Essentially, what an investor would have made overall from an investment over the past 12 months from both capital gains and dividend payouts, including any options premiums. And let's start here with IBIT, which should reflect the price changes in Bitcoin relatively accurately, minus the expense ratio of 25 basis points. So this tells us that at the time of this taping, IBIT was up 104% over the past 12 months. That's pretty impressive, but MSTR, shares in Strategy Incorporated, were up even more by 178%, which is to be given what we discussed in the previous section of today's video about the leverage that MSTR uses. Leverage can multiply investment returns on the way up, as here, but do remember that leverage can also multiply investment losses on the way down. And finally, YieldMax's MSTY. It shows a total return of 116%, which is a bit more than what you would have made as total return had you just bought IBIT, but noticeably less than what you would have gotten from buying shares in MSTR. Now, this difference between the total returns isn't the leverage that MSTR uses, as one might spontaneously suspect. It actually comes more from the fact that MSTY has a covered call strategy that caps the upside on the investment, like all covered call strategies do. Or in other words, they sacrifice upside for higher cash payouts, which leads us to the next column, the distribution yield. Of the three here, only MSTY paid any dividends at all. And as we already discussed earlier, this distribution yield of 147% tells you that MSTY paid out more in dividends last year than its share was worth at the end of July. It also tells us the share price of MSTY should have been down over the past year. And indeed, they are currently trading more than 20% lower than a year ago. So in summary, over the past 12 months, IBIT would have gotten you a solid return with a simple risk profile. Only the underlying Bitcoin price risk. Shares in MSTR, Strategy Incorporated, would have amplified the pure Bitcoin gains with its built-in leverage. And MSTY would basically have converted the strong Bitcoin performance into these very high dividend yields here, but at the expense of a falling share price that would have eaten into your capital base, so to speak. Now that you've seen these numbers and understand how MSTY works, what do you think? Would you consider one of these Bitcoin investments as part of a diversified portfolio? And if yes, would you buy Bitcoin via an unleveraged ETF like IBIT, a leveraged play like MSTR, or would you focus on short-term income via YieldMax's MSTY? Or would you not touch anything crypto-related at all? Drop a comment below and let me and the community know. So personally, when we initially looked at YieldMax's MSTY, as well as shares of MSTR, my first thoughts were that both confirm one of the fundamental pillars of investing: high risk, high return. As YieldMax says itself on its webpage for MSTY, investing in the fund involves a high degree of risk. As we covered already, YieldMax's MSTY piles options risk on top of leverage risk via MSTR, on top of the basic underlying risk of how Bitcoin prices will develop. That's already quite a lot of risk, at least for us, even before we add the fact that, as per YieldMax's website, MSTY also does not invest directly in MSTR. It's all via derivative strategies with all the specific risks that entails, including the fact that covered calls mean that the fund strategy will cap its potential gains if MSTR shares increase in value, as we just covered in the performance overview. And at the same time, the fund's strategy is subject to all potential losses if MSTR shares decrease in value, which may not be offset by income received by the fund. I don't think many of our Diamond NestEgg regulars would be surprised at this point when I say MSTY is not for us. This is just too much risk for me to stomach for any part of my portfolio. But as I always say, everyone's financial journey is different. That said, even if you feel that you fully understand how the product works and what the underlying risks are before making an investment, I personally think you should tick all 5 of these boxes before seriously considering an investment in MSTY. 1. You have a strong conviction that Bitcoin will go up over your investment horizon. MSTY is a bullish play on Bitcoin, and no layer of this pyramid really focuses on mitigating potential risks. 2. You have a defined short-term investment horizon in which you are looking for a chance to get some opportunistic income on the back of rising Bitcoin prices. 3. Even if Bitcoin prices are rising, you're not looking for total return or long-term capital growth from this investment. You understand that the capital gains upside of an investment in YieldMax's MSTY is capped by the nature of the option strategies employed. And in fact, the share price of MSTY may go down despite some high dividends. 4. You're not tax sensitive and understand that options premiums are generally taxed at your full marginal income tax rates. And 5. You keep your investments small enough that you could manage if it never paid out any dividends and or the share price basically went to zero and your entire investment was lost. There are no guarantees of any kind. And as we always say here at Diamond NestEgg, Past performance is not indicative of future results or events. All right, Diamond NestEgg members, super savers, and course fans. So I hope you enjoyed this video and learned something new. And if you watch this MSTY video to the end for the learning experience, but bonds are actually more your cup of tea, then check out this video here on our bond courses. Use coupon code BONDS2025 to get an additional 10% off of our popular bond course bundle before Monday, September 1st. Prices will be going up this fall as we are making some significant course updates at the moment. The 10% coupon code BONDS2025 can also be used to purchase bond beginners or bond masters individually. I've linked all the details on our bond courses and our YouTube Super Saver membership below this video for your convenience. See you again very soon with more brand new wealth building content for your financial journey.